Welcome back. You're still tuned into Trading Hour. Vinati Organics is in focus. The company reported its Q2 numbers. Revenue surged 19% on a YOY basis. EBITDA grew nearly 28% and margins expanded as well. To know this and more, Vinati Saraf Mutreja, the Managing Director and Vinati Organics, is joining in now. Vinati, good morning. Thank you so much for joining in. Well, it's been a strong growth on a YOY basis. Can you explain which portfolio or which segment led to this growth? Was it export-led? What has been the pricing improvement and volume improvement as well?
Sure. Compared to last year, most of our products this year have seen a volume improvement. Last year was especially low when it comes to ATBS because of the destocking effect, which we saw sort of improving starting January 2024. Again, coming to our new products, the antioxidants as well as the butyl phenols, they have all picked up in volumes compared to last year. IBB, of course, is a mature product and that remains more or less stable. So most of the growth that you're referring to in terms of revenue is coming from volume, is volume-driven growth.
Right. Okay. So you're highlighting it's a volume-driven growth. You did highlight about ATBS as well. I want to just see that because ex-ATBS, when you're looking at it in terms of the portfolio growth, seems a bit muted, right, for some types. So what are we expecting there specifically in terms of the growth ex-ATBS?
Sure. Actually, that is not correct, your statement. The percentage share of revenue of ATBS is constantly coming down in our portfolio. I mean, it used to be 60%. Actually, even this quarter, it was 40%, which means that our newer products are gaining in volume. And like I mentioned earlier, it is the antioxidants as well as butyl phenols, which are seeing actually a 30 to 40% volume growth year on year.
Okay. No, actually what my colleague also meant to ask that it's largely driven by ATBS so far, and that continues to be the case again. So what happens with the newer portfolio? But as you said, it has started picking up in this calendar year with butyl phenol and antioxidants doing well as well. While antioxidants is scaling up, you've been speaking about that, the pace is lower than what the market had been anticipating. They were expecting it to be the big growth driver. Are we seeing some pricing pressure here? What is the demand? What is the outlook on this particular portfolio?
You are right on the antioxidant front. Approvals are taking longer than expected since it is used as an additive. The major users of antioxidants take a very long time for approvals. We are also seeing a lot of pricing pressure from China in this particular segment, which wasn't the case 2 years back. And hence, the growth is not as much as we had expected. However, it is still there and we are still bullish on this segment going forward in the future.
So how long before you think there could be an improvement in pricing and approvals would come by, which are taking some time?
Yes, absolutely. We are getting approvals in many of these with many of these polymer manufacturers, and it's a matter of time where we are fully approved by all of them, especially given that a lot of them are based in India and they want to develop an Indian supplier, an Indian source. So also as far as pricing, I mean, we are trying for an anti-dumping duty against China for antioxidants. Now let's see how that shapes up.
Okay. Your VOPL product commissioning, be it MEHQ, be it Guaiacol, that has been pushed through FY26 now, right? Do we expect demand and pricing improvement for these products in coming years? And once it does come on stream, what kind of revenue contribution are you seeing from here?
Well, that entire product portfolio of Vinati Organics, which is the subsidiary, the total revenue potential is 500 crores, which includes 5 products, MEHQ, Guaiacol, Anazole, tertiary amyl alcohol as well as PTAP, of which the MEHQ and Guaiacol section has been commissioned a few months back actually. There we are in the product sampling phase as well as the plant testing and commissioning phase.
Okay. All right. You had given a guidance of around 20% CAGR in terms of revenues with EBITDA margins of 25%. Are you on track to achieve that? Or now that you're seeing volume improvement, you can actually see an upside risk to that?
No, I would still maintain, and even given our Q2 numbers, 20% growth in revenue with a 20% growth in EBITDA as well as net profit, which would amount to about 26 odd percent or 27% of EBITDA margin. And this is what I think we will achieve in FY25 as well as hopefully in FY26.
Just a last word, Vinati, in terms of the next phase of growth and investments and capex, where is that post-commissioning of ongoing projects? What are we looking at in terms of that, as well as new product launches? When are we expecting those by?
So even the ATBS new line is expected to come on stream in a few months. Along with that, the other products in Vinati Organics will take another 6 months to get commissioned. We are also adding more products to the antioxidant portfolio. And we will be making further downstream products from the existing products that we are making. Some niche products used in personal care as well as fragrance industry.
So when you say ATBS in few months, is it Jan 2025, which was the earlier date?
Yeah, hopefully by February 2025 and then 1 month of commissioning. But the real revenues from that line would come in FY26.
Okay, all right, take that point. Vinati, thank you so much for joining and giving us all those details. So that's the word coming in from Vinati Organics. The stock, though, lower by 2%. It is actually at the day's low. There's been a sharp fall from the highs of the day. The new line for ATBS that was expected in January is expected to come by February. So some clarity there is what the street needs. Time for a short break now. We'll get you more on the markets on the other side. Stay tuned.